everyone, it's Sunny Waterman from Personal Tax Advisors, here with another 2-minute tax tip. Today we're going to talk about the foreign property question. If you've had your tax done by a preparer over the last few years, or you've read your own tax return, you've seen this question asking if you owned any foreign property. Specifically, did you own or hold specified foreign property where the total cost amount of all such property at any time in the tax year was more than $100,000 Canadian. Now, you may be wondering why this question is even being asked, and the reason it's being asked is because the government really wants to keep track of whether or not you might have some foreign assets that are perhaps making you a profit that you have forgotten or omitted to report on your Canadian income tax return. As you probably know, if you are a tax resident of Canada, you must report all income from all worldwide sources on your Canadian income tax return and be taxed on it. Now, when they talk about specified foreign property, they're referring mostly to property that is owned in order to earn a profit, that is owned as an investment of some sort, as opposed to something that you own in a foreign country that is really just for your own personal enjoyment. And I also want to point out that we usually think of property as real estate, but foreign property can also be shares in a foreign corporation, which if you have an investment portfolio, you might have some shares in foreign corporations whose value at some point during the year adds up to more than $100,000 Canadian. Now, if you say yes to this question, that opens up a whole other form that you are required to file called a Form T1135. And this is a form where you report all the foreign property that you have that adds up to this $100,000 and more in value. You'll have to include some details about that property as specified by the form. It's important to note that filing the T1135 does not trigger any additional tax. If you have been reporting the income from your foreign investments on your Canadian income tax return, as is required by law, then it is being taxed, and therefore this form does not itself trigger any tax. It is due at the same time as your income tax return. Now, if you don't file the T1135, and you were supposed to, there are steep penalties for this. If you file it late, the penalties are $25 a day to a maximum of $2,500. That's assuming that lack of filing was just sort of due to an oversight. If the Canada Revenue Agency discovers that you did not file this form or didn't file it on time due to gross negligence, or sometimes that's just a kind way of saying that you didn't do it even though you knew you had to, the penalty jumps to $500 per month for a maximum of 24 months, so that totals a $12,000 penalty if they catch you 2 years later. So there's no tax implications of filing the return, but there are penalty implications of not filing it. If you have forgotten or neglected to file the T1135, there are some steps you can take. You may be able to file it under the Voluntary Disclosure Program. If this is something that may apply to you, if you have to complete a T1135 and you're not feeling confident about it, or if you are late and you know that you want to go back and file something potentially under the Voluntary Disclosure Program, do get in touch. We can probably help you with that. You can reach us at our website, www.personaltaxadvisors.ca. You can call us at our office here in Toronto at 647-351-5099, or you can email us through the contact form on our website or at taxes@personaltaxadvisors.ca. I hope this has been helpful to you, and we'll see you next time.